Well, the major averages are faltering for a third straight day as trade tensions between the U.S. and China continue. The clock continues to also count down. This as the White House drawing up a firm line of March 1st, still to holding on to this March 1st date to strike a deal. But there is a silver lining right now. Markets aren't getting hammered even more than they should be with all of these headlines. And to me, that might be a buy signal. Here to discuss, Mahoney Asset Management President Ken Mahoney and Accor Managing Director David Sowerby. David, let me start with you. You know,
hi, Charles.
Obviously, these sort of headlines and anxieties in December, I think we'd be off right now 500 points in the Dow, a lot more. And I'm seeing resolve, even though we've started to falter here. And I'm thinking maybe this is just consolidation, nothing else.
It's a natural pause in the market's strong rally since December 24th, Charles. And even since the government shutdown in December, markets are materially higher, just like they were, I remember, in late 1995, extending into 1996, when the last more prevalent government shutdown took place. It was a non-event at the end of the day. Stocks go higher on corporate profits, sensible monetary policy, and good capital discipline by companies, and that's why they're going higher today amid this government on again, off again, shutdown, open or not.
You know, of course, Ken, we are hearing good things. I mean, no one wants to really believe it until it happens, but it was such an embarrassing moment, I think, overall for Washington, D.C. There were no winners out of the whole thing, and, you know, but government employees is sort of suffering. The tide of public opinion very negative. I don't think either party wants to deal with that anymore, and they both seem to be accepting that, finding the right semantics to craft a deal. But it feels like that is going to get done, and I think the market sort of knows that too. That's why we've got this pullback, but it's really nothing in the grand scheme of things.
Benign. There's not a lot of volume here. There's not a lot of energy behind the selling. I used to mention December. Forget about 500 points. I think that'd be a four-digit number, like 1,000 points plus. What I really like to see for the 3 to 4 hour. Remember that witching hour in December when we were selling off, cascading every minute. And here at 3 or 4 o'clock, we're finding buyers. I've counted, including yesterday when the Dow was down 220. 12 days in a row, the market's been higher from 3 to 4, and that's pretty good. So,
yeah, we made a 160-point rally off the lows yesterday, going into the last hour of trading. When to your point, a month ago or 2 months ago, we would certainly have been off more. But on the point of December 24th, are you in a camp that believes we still have to find a way to retest that in order to really feel confident about the next leg higher?
No, I think we make a higher low. I mean, that is full. I mean, that is the perfect storm, right? We had everything going. The government looming, you know, the government shutdown looming. We had the trade with China deal. We had liquidations because of tax loss selling. We had it all, you know, and then we had $40–50 billion a week coming out of, you know, funds. Guess what? That, to me, is capitulation. I don't think we go there. I think we make a higher low. This consolidation is actually very good for the bulls, quite frankly.
David, what areas are you looking at in this market?
Sure, Charles, and just quickly, the average S&P 500 stock is still 17% below its 52-week high. Small cap indexes are 12% off their highs. So I think where I'm finding the greatest opportunity is in small cap stocks, which have, I think, more legs to go. Corporate profits will be just fine. Economic growth just fine. The tax cut has positive impact on 2019, even better than 2018. So small company stocks like Voya Financial, with a strong retirement division, growing its operating earnings at 10% looks favorable to me. In addition to that, Liberty Sirius, the spin-out tracking stock for Sirius, the parent company, has completed its acquisition with Pandora, and they are generating ample free cash flow. You've got the genius of John Malone behind you. Those on the small cap side, throw in quickly Harris, which is acquiring Level 3 Communications. Those are all companies that are generating cash flow.
And Harris, I think, just had a great earnings report, too. That stock is looking great. I've got subscribers in that one, too. Where are you looking, Ken, right now? Where are you trying to be opportunistic?
You still like technology. You know, technology led us. Of course, the fourth quarter, everything took a hit. I think investors are still willing to pay for the growth story. I mean, if you're going to be in a risk asset, you might as well be something that has some good upside. So I look at banks. I don't like that space. Pharmaceuticals now with some pricing pressure from Washington. I'd rather be in technology. Yes, I know the PEs are high and so forth.
And the same horsemen that got us there in the first place, you go back into all of those big names, all of the momentum names.
Or you buy the basket, XLK, right? And you buy the whole basket of it, and you kind of go that way with it. But again, I think technology led us here. We had a disruption in fourth quarter. I think technologies lead us back out.
Well, we just had the board up. 3 of the 5 key momentum names are actually higher right now, even though the Dow is still off.
Right.
Ken,
like that.
thank you very much. David, thank you as well. Appreciate it.